Hello, good morning, ladies and gentlemen. How are we all doing today? And I hope we all had a wonderful, profitable day yesterday. Well, before we kickstart this session, I want to see some confirmations that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this started. So I would really like to see some feedbacks in the comment section, please. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section. So let's see what we have here. Okay, Kareem88, thank you. Thank you very much. Ravin Crow, good morning to you. Thank you. All right. Okay, Carrie, I see you. Good morning to you. Thank you very much. All right. Okay, greetings from Switzerland. All right. Okay. So I would take this as a positive confirmation that we are good to go this morning. I'm so excited to welcome you to another promising session on the Extreme Speed Live. My name is Sharif Daramola, and for the next 1 hour, I will be your host as we evaluate and review the financial market using technical parameters to identify trading opportunities lining up for us today. Well, as usual, what we normally do here is to first of all review all the pairs that we have been monitoring since the beginning of the week, and I think we have like 5-6 pairs that we have been monitoring since the beginning of the week. So we are going to first of all look at how well these pairs are doing before diving into what our expectations are for today. And for those who are joining us for the first time, I'm so glad to have you guys around. You are welcome on board, and I hope that this will your first session here with us will have a significant impact in your trading career. So what we simply do here on a daily basis is to gather as a community in anticipation of the New York session, position ourselves in such a way that we can catch any trading opportunities lining up for us during the New York session today. And we always review and monitor all the pairs that we have been monitoring. So we have a series of pairs at the beginning of the week. So we monitor those pairs through to the end of the week. So it initially might look a little bit complicated. It's okay. With time you get to understand how this works, and I assure you that you will be able to use the information you have gathered here to make your independent decision during the trading session. So once again, you are welcome on board, and let's dive into the market. So the first thing we want to be doing this morning is to review the economic calendar, and today for 14th of March, we have 3 major events that we are looking forward to today, and which will definitely be having a major impact in the market. Now we are going to be focusing on the events that will be affecting the currency pairs that we have been monitoring. That's the pounds, the dollar, and the Japanese yen. So for the pound sterling, we already have this event which happened earlier today, and that's the claim account change. And we have an actual figure of minus 11,200, which is a little bit positive on the positive side, considering that we had a consensus of minus 12.4 thousand. So we had a positive variance of about 0.1, which is a little bit on the positive side for the pound. And then we also have the unemployment rate, which came in at 3.7%, which though it was below the expectation, and that gave us a negative variance of minus 1.58. And it appears since this event came up this morning, we have been seeing some selling pressure resume on the GBPUSD. So stay tuned in. We shall be looking at this together and see how we can position ourselves for any trading opportunity on the GBPUSD. Then in 4 to 5 hours from now, we have the consumer price index. This is a major high impact event which is always released by the US Department of Labor Statistics, and this data has a long way in giving us an indication of the the inflation health of the US economy. So everyone is looking forward to today's event too as well. And let's see how price action will anticipate and then react to the event after the event, the data comes in. So we are going to be looking at that too as well. Then later on in the day, we have the Bank of Japan's monetary policy meeting minutes, which is coming up, I think about 18 hours from now, I guess. I think between 15-18 hours from now, that is going to be happening. So that's also an high impact event, which will definitely be having an influence on the USDJPY during the Asian session today. So with that being said here, let's dive into the current chart and look at things from a technical standpoint. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, we have started the week on a positive note as price action has hit our TP target as early as, I think, how many hours was that? It took us about 2-3 hours. We hit our TP target at the $72.50 level. So what was our expectation during the live session yesterday? What were we looking at as we anticipated the live session? Well, we had this situation identified earlier at the beginning of the week where we saw our price action was caught within a channel between the $77.20 area and the $76.50 level. And with this kind of situation here, you all know what we look out for. We want to remain patient, wait for either a breakout of the channel or a breakdown of the channel for a trading opportunity. So with our buy stop order sitting right above this area and a sell stop order below the support line, we had this sell stop order triggered here, and price action moved about 250 pips in that direction to hit the TP. I think over 400 pips in that direction to hit the TP target. Then during the live session yesterday, we were at the situation here where price action was trading right above that $75 level. Let me zoom out a little bit so you can see things more clearly here. So we had a $75 level identified during the live session, and when we took into consideration the buy pressure around this area, we were looking forward to probably price will be respecting that level to incite another wave to the upside. But one thing I stated here is that we might likely see price action do a retracement of that impulsive move, and that if we start seeing selling pressure below the $76 area, we want to be moving our stop loss on the previous position to secure the position, and at the same time have a sell stop order below the $75 area to trigger a trend continuation to the downside. And this was exactly what happened. I think immediately after we ended the live session yesterday, we saw the sell position triggered, and price action also moved about, how many pips was that on this one? It moved about 240 pips in our direction to hit that TP target. So for everyone who had been part of this trading, this profitable journey, well done to you guys for being on standby to catch that move. Now, I told you yesterday that as soon as price gets into the $72.50 level, we want to see how price action will be reacting to that structure to determine if we are going to be buying or selling the US oil at that point. And we said if we start seeing buy pressure resume around this area, then we might likely be looking forward to buying opportunity. And if a breakdown of the $72.50 happens, then this will be welcoming an additional sell position to our existing buyers. But what happened here was quite interesting. We saw some buy pressure resume around this area on our lower time frame, but personally I missed this opportunity. But those who took advantage of this opportunity here, well done to you for being on standby to catch that move, as you would have made at least about 250 pips in profit at this point. Now, since price action came back into the $76 level to retest that important key level that we identified at the beginning of the week, which we said shall be serving as a yardstick for our trading activity for this week, we started seeing another wave of bearish momentum, bringing price back down into this current structure. So with the situation of things right now, looking at how price action has started this week, it is quite obvious that the week has started on a bearish note. And to further emphasize the bearish trend in this current structure on the 1 hour time frame, that is since the beginning of the week, I was able to connect the series of lower highs here to further emphasize the strength of the sellers at this particular point in time. So with the situation we have here, we have a bearish trend line, and for today this bearish trend line is going to be serving as our yardstick for a trend continuation to the downside. So what this simply means is that if price action continues to trade within the ambit of this bearish trend line, we shall feel comfortable in whatever sell position that we are in right now. However, if price action breaks out of the trend line, then definitely we want to be anticipating a momentum shift, which might likely lead to a significant bullish momentum to the upside. And considering the fact that we are currently sitting on a strong demand zone, a possible bullish momentum is still very, very possible in this market. So before I go into the details here, I would like to scale up to the daily time frame so that we can see things from an holistic point of view, and for the sake of those who are not part of the live session yesterday, so that they can also be part of the idea that we have running in this market. So we shall be scaling up into the daily time frame, and the first thing we observed during the live session yesterday on the daily time frame was the fact that price has been bearish since the second half of last year. And to emphasize that importance of the bearish momentum, we connected the series of lower highs here, giving us that bearish trend line since the month of June last year. However, if you zoom into the current structure, that is what has been happening in this market in the last 4 to 5 months, you will see that price action has been caught within a consolidation phase between the $83 level and the $70 area. So since the month of November last year, price action has been trapped within this range where we have been seeing some bullish attempts. Remember that this is the lowest point price has ever been in the last 1 year on the US oil, and since then we saw a situation where price continue to find higher lows, giving us a sign that buyers are trying to break out of this channel. But one thing for sure is that we started seeing certain pressure negating all attempt by the buyers to break out of that structure somewhere around the 83 and the $80 level. Now, with the situation of things yesterday, we said that I told you yesterday that we are going to be using the $76 level as our yardstick for a trading opportunity for this week. That is, if price action trades above the $76 level, we want to be looking forward to buying opportunity. But if price action continues to the downside, breaking down the $76 level, then we might likely be turning to a sell-off in this market. And what we have seen here since the beginning of the week, we can see that the week has started on a bearish note, breaking down the $76 area. In fact, it has gone ahead to even break down that bullish trend line that we identified earlier. And for me at this point, this is more or less a sign that we might likely be seeing a further move to the downside in this area. So we need to understand what is really going on in this current structure here to decipher what our next line of action will be. So with the breakdown of that demand of that bullish trend line, we might likely see a retest of structure, which might not happen today. But if that does not happen and we continue to see a trend continuation pattern around this area on our lower time frame, we might likely be joining another wave of bearish momentum to the downside. So for any sell position we have right now, or we are planning to get in, we want to be having our TP target around the $70 area, where we want to see how price action will be reacting to the structure to determine if we are going to be adding more sell position or are we going to be anticipating a bullish momentum. Remember, this area has been a strong demand zone, so it's more or less an area where buyers has always gathered here in the last 4 to 5 months to push price to the upside. So it's a very critical structure. We need to see how price reacts with to decide what our next line of action will be. So for sellers right now, for those who are still in a sell position in this market, you want your TP target to not exceed the $70 area, between the $72 and the $70 area, so that we can use that structure to decipher what our next line of action will be. So we shall be scaling down to the lower time frame, back down to the 1 hour time frame to make a decision for today. So right here on the 1 hour time frame, okay, let's go to the 4 hours time frame first of all. I think we get to see things more clearly there before we move into. So on the 4 hours time frame, this is what we saw here on the 4 hours time frame. We saw how price has been caught within the channel just between the $80 level which has been serving as a strong supply zone here, and we have a demand zone at the $73.50 level. And right now, price action is right within that demand zone. So joining a sell momentum here is still very risky. So if you're already in a sell position, you want to move your stop loss to secure the current sell position, as we might likely see a bullish momentum come in from this area. And so with the $72.50 level serving as the baseline of that demand zone, a breakdown retest of that structure will definitely welcome additional sell position here. But if we start seeing buy pressure resume around this area or above the $72.50 level, something like price action transitioning into a reversal pattern like a double bottom structure, then definitely we want to be anticipating a trend continuation to the upside. That is probably a bullish momentum to the upside from this area. So let's look at the 1 hour time frame. Let's see how participant has been reacting to the structure here at around the $73 level since the beginning of this week. Now, when we scale down to a much more lower time frame, this is the 1 hour time frame here. So I will zoom into the current structure. So I had the position running at the breakdown of the $73.80 here this morning, and price action has been moving significantly well in our favor. But one thing you will notice around this area is that we're beginning to see some sharp rejection of the zone. And like I told you on the 4 hours time frame, price action is currently trading within that demand zone that we identified on the 4 hours time frame. So we need to be very, very careful at this point. So for those who are still having a sell position running here, ensure you move your stop loss. And the most appropriate place I think you should be moving your stop loss should be around the $73.60 area. Let's give some room for price action to breathe, with the hopes that price action might likely continue to the downside. Now, to further emphasize the strength of the sellers here, I want to see price action break down the $72.50 level to give me further confirmation to join a decline to the downside. Remember, I told you that the $72.50 level is the baseline for that demand zone we identified on the 4 hours time frame. So we want to see price action take out all the buy positions here to give us some confirmation that we want to be getting ready to sell. But if price action starts finding buy pressure within the zone in the next couple of hours, then we might be anticipating a bullish momentum. Remember, we have moved our stop loss accordingly to secure the current position, and then we want to be using this trend line we identified here as a yardstick for trading activity for this week. So remember, I told you earlier that we identified this trend line after connecting the series of lower highs, and one thing I want to be seeing here to buy the US oil is to see a breach of that trend line. So I want to see something like buy pressure resume within that demand zone area here, price action breaking out of that trend line with a structure around the $73.80 level here. Let me bring this out a little bit so that we can, okay, so let me put at the right hand side. So we have the $73 area, which also shares a confluence with that structure. So I want to see price action break out of that trend line for me to, for a confirmation that bullish momentum is coming in this market. So if we start seeing buy pressure resume above the structure, then definitely we want to be adding more position to our existing trade. And the current market structure here has a potential of giving us multiple entry, as we have structures like the $75 area, which if price action breaks out, retest that structure, we want to be adding more position to our existing trade. And if a further breakout of the $76 area happens, we also want to be adding more position to our buy position there. So let's see how price action plays out. For those who are already in the sell position in this market, kindly move your stop loss accordingly to secure your current position, and let's wait out and see how price action will be reacting to the structure, and the reaction will determine if we are going to be buying or selling the US oil for today. So we have a $72.50 level where a breakdown of that structure will definitely welcome additional position on the sell buyers on this market. So that is that on the US oil for today. And if you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair. And the next option we are going to be looking at today is the US tech. In fact, the US tech has been quite choppy in the last 24 hours here, as we are yet to get a sense of direction in this market. So before I go into the detail here, because personally I didn't have any position running on the US tech so far this week, and before I share with you what is really going on here, I want us to quickly look at the 4 hours time frame, where I was able to identify, hold on a second, what happened here. Okay, I think, all right, so I'm trying to do some readjustment here. Give me a moment, please. Something tampered with my lines here. All right, okay, so this is the structure we have here on the 4 hours time frame. Throughout the month of February, it has been bearish on the US tech here. As you can see, after connecting the series of lower highs, we have a couple of trend lines to emphasize the strength of the sellers. But one interesting thing about this current structure is the fact that despite the lower highs in this market, price was unable to find lower lows. And as you can see, how the 11,800 level has been a strong buying niche in this market, as every attempt by the sellers to break down the structure at every point in time has been met with strong resistance from the buyers, and this has continued to put on bullish pressure in this market. So the bearish momentum we have seen so far this week is not really that strong, because we've seen so far this last month is not really that strong because of this demand zone around the $11,800 area. Now, at this point in time, it's not advisable to be selling here, considering the strong buying niche in this market at 11,800, because for us to sell the US tech at this point, we want to see price action take out all the buy positions here, which will be reflected on the chart as a breakdown of the 11,800. And not only if a breakdown of the 11,800 happens, that we can be thinking of selling the US tech based on this current structure. And in fact, it's looking more bullish at this point. If we look at what happened yesterday during the New York session, I think a couple of hours into the New York session yesterday, we saw a huge breakdown of the 11,800, which is a sign that sellers might likely be coming in. But one thing we saw immediately afterwards was this sharp rejection, bringing price back to the upside. Hereby, this candle closed in the form of a hammer candle, which from a technical standpoint is a strong signal that buy pressure still exists around this area. So with this kind of situation here, we want to be looking forward to buying opportunity as long as price remain above the 11,800. And the only way we want to be seeing a buy potential here is to see a breakout of this trend line. That is a sign that that trend line may no longer have the capacity to continue to hold a bullish momentum in this market. And what I want to be seeing to buy is to see a breakout of that trend line happen. Remember, we are not getting too excited at this point, as we need further confirmations to happen before we want to be joining that bullish momentum. So I want to be seeing something like a retest of structure on my lower time frame, right above that bullish trend, above that bearish trend line, to incite another wave of bullish momentum. And if a further breakout of that trend line here happens, then we want to be adding more position above the $12,100 area. Now, with the information we have gathered here on the 4 hours time frame, I want us to scale down to a much more lower time frame, which is the 1 hour time frame, where we want to be setting up ourselves for any potential trading opportunity during the New York session today. So yesterday we had the situation here where I said if price action breaks down this structure here, we want to be selling. Though it happened, I hope you sold. If you sold, you must have made some profit here before that bullish momentum came back in. Though personally, I missed that opportunity. And with the situation we have here, we begin to see some buy pressure around this area. So since the breakdown of the 11,800, which was immediately met with a sharp rejection by buyers in that market, since then, price action has been finding higher lows. And though we have higher lows, we are yet to have a higher high, which gives us an equilibrium in this market, as we need a further significant structure to give us that confirmation to join. So like I said on the 4 hours time frame, I want to see price action take out the bearish trend line here to give me a signal of where price action will be going. So in that regard, I'm looking forward to a breakout of the of the $12,000 area, breakout retest of the structure on my lower time frame. Then I want to be buying at the site of buy pressure in our lower time frame. And if a further breakout of the 12,100 level happens, we want to be adding more position to our existing trade. So on the US tech for today, it's looking very bullish here based on the current structure we had here, and coupled with the fact that buyers continue to show their strength above the 11,800. So let's continue to look out for buying opportunity above the 12,000 and the 12,100 as we head into the New York session today. However, if it so happens that price action drops below the 11,800, breaking down that structure to the downside followed by selling pressure below the structure number lower time frame, please, we shall be getting ready to join a decline to the downside. So this is what we are looking forward to on the US tech for today. It's looking very bullish, but a breakdown of the 11,800 will be welcoming selling opportunities in this market. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we are going to be looking at this morning is the GBPUSD. And on the GBPUSD, we have a profitable situation running right now on the GBPUSD as we bought the GBPUSD during the New York session yesterday. And what was our expectation? What did we see in this market during the live session yesterday that made us think of buying the GBPUSD? If you recall what we saw here yesterday, you would realize that we initially identified a channel where price action started the week with a bullish note here. We saw this engulfing candle springing out of the 1.20350 level, and as soon as price got into the 1.21050, we saw a resistant level there as selling pressure resumed, and this selling pressure here appeared to have evolved into a retracement fade that led into the significant breakout of the 1.210500 level with an engulfing bullish candle. And during the live session yesterday, we were around here during the live session, just around that bullish trend line which we identified at the beginning of the week. Let me quickly show you the importance of this trend line. So this trend line has been a major determinant of price action since Tuesday last week. And since the breakout of the 1.20 level, which shares a beautiful confluence with that trend line, price action has continued to trade above that bullish trend line. And remember what I said here about the trend line yesterday. I said it's going to be serving as a yardstick for trading activity for this week. And as long as price remain above that bullish trend line, we shall feel comfortable in our buy position. But if the trend line is breached to the downside, then definitely we want to be anticipating a selling opportunity in this market. So we saw price action find buy pressure along the bullish trend line here, and I told you that the sight of a reversal pattern on our lower time frame will be welcoming a buy position in this market. So we had a neckline of a reversal pattern at the 1.20750. We had a buy position triggered there. That was the first position. Then we had a second position triggered as buy stop order here was triggered at the breakout of the 1.21050 level. And with the situation of things right now, if you are still in this trade on both positions, you will be having your first position running with about 87 pips in profit, and the second position here running with about 60 pips in profit at this point. So for those who are taking their profit on this one, it's okay. But for those who are still in this trade, still holding on to their position, at this point in time, my advice right now is for you to move your stop loss accordingly to secure this current position. And where are we going to be moving our stop loss here? I'm suggesting an area below the 1.21400 level, as we have a structure here. This is a structure at the 1.21450, which was a strong selling niche in the past. We had the breakout of that structure, and in the last 6, 7, 8 hours, we have been seeing buy pressure resume above that level. So below the 1.21400 level seems most appropriate, which falls right below that bullish trend line, to secure this current position as we give room for price action to breathe in this market. Now things has got a little bit interesting with this current structure here, as you can see what has happened in the last 12 to 15 hours. Now we saw that as soon as price got into the 1.2200 level, we are beginning to see selling pressure resume in this market. So attempt by the buyers to continue to find higher highs has been limited right now, with selling pressure that appeared below the 1.2200 level. And if we take a visual representation of what is really going on here, following the impulsive move that started yesterday, we have the situation here. Price came back into the 1.21450, and look at what happened like 4 or 5 hours ago. We saw sharp rejection of the 1.21800 level as price action was unable to break the previous high here, hereby giving us a lower high at this point. Then we have price action come back into the 1.21450, and if we zoom out, what do you think you see on this current structure? Price action appears to be transitioning into a potential reversal pattern here in the form of a double top structure. And you all know how the double top structure works here. It's a very strong reversal pattern, and from a technical standpoint, whenever we identify a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline, which definitely will be serving as a yardstick for trading activity for today. Now with the situation we have here, the 1.21450, which was a key significant structure in the last 24 hours, appeared to share a beautiful confluence, which where we can call our neckline of that reversal pattern. So with the neckline identified at the 1.21450, what we want to be seeing today to sell the GBPUSD to see price action break down the 1.21450. And if you look closely into the structure, it also shares a confluence with that bullish trend line. So remember I told you that since Friday last week, price action has been trading above the bullish trend line here. As you can see, price action has been respecting it. So if the neckline of this potential reversal pattern is broken to the downside, it would have broken down that bullish trend line, and at this point we might likely be seeing a momentum shift in this market. And remember that we have a macroeconomic event coming up in 4 hours from now, which is the consumer price index, which is an high impact event. I told you it's a major yardstick for the inflation rate in the US economy. And with the situation of things right now, we can see that in the last 15 hours, price action has been caught within a consolidation phase, which further emphasized the indecision in this market, as participants are looking forward to a catalyst that will give a sense of direction. And as a result of this, we have this kind of reversal pattern here. So we are going to be waiting for price to drop below the 1.21450 level, which will also break down the bullish trend line here to give us a bearish signal. And remember, with this kind of situation here, we are not going to be jumping right into the sell momentum if the breakdown of the structure happens. And the reason why we are not going to be jumping into this sell momentum is simply because of the fact that it has been bullish since the beginning of this week. At least since last week's trading session, it has been bullish, which the trend line further emphasizes here. So if a breakdown of the structure happens, we are not joining right away. We want to wait for further confirmations to happen, which will be reflected on the chart as a retracement back into structure. It could be a retest of the trend line, the retest of the 1.21450 level, selling pressure below the structure on our lower time frame. Then we could join that decline to the downside. And if a breakdown of the 1.2050 level happens, we want to be adding more position to our existing trade. A further breakdown also of the 1.20350 will be welcoming additional position in that regard. So the reason why I have stated here that we should hold on for a retest of structure to happen here is the fact that it's a bullish trend line. That is one. And secondly, a breakdown of the trend line is not a confirmation that a bearish momentum could come in. It could probably be a false breakdown where price action could climb back to the upside to incite another wave to the upside. So we want to be very, very careful here. So for us to sell, we want to see a breakdown of structure initially, breathe in and breathe out, hold on for a moment, scale down to your lower time frame and look out for a retest of structure followed by selling pressure on our lower time frame. Then we can join that decline to the downside. So this is the only reason we are going to be selling the GBPUSD for today. Now, if the opposite happens here, that is, if the trend line here is still strong enough to continue to hold the bullish momentum in this market, then we want to be waiting for a breakout of the 1.2200 level to add more position to our existing trade. And like I told you yesterday, we have a buy stop order sitting above the 1.2200 level with the hopes that price action will break out of that structure. So let's see how price action plays out in the next couple of hours around this area, and as we head into the CPI event coming up later in 4 hours from now. So these are my views on the GBPUSD for today. So let's hope that price action moves as expected. So my bias still tends towards the bearish momentum in this market right here, but if the bullish trend line becomes strong enough to continue to hold the bullish momentum, we'll have no choice than to remain bullish in this market. If you have questions, feel free to drop your inquiries in the comment section, and I always advise that you munch my screen so that you can use it as a reference point when you're about to make your individual decision. So in the absence of no questions, I will be moving on to the next pair for today, and the next pair we are going to be looking at today is the XAUUSD. And on the XAUUSD, we also have a similar situation here with what we have on the GBPUSD. And in fact, it appears I have my position triggered here. Let me run through what our expectations were during the live session yesterday before we go into the details for today. So during the live session yesterday, where were we during the live session? Okay, we were around the $1,890 level. So this was where we were during the live session yesterday. And prior to the live session, I told you how I was able to identify this resistance point and the support line for the channel here. So we had a support line at the 1,869 and the resistance line of this channel sitting at the 1,895. And I told you yesterday that we want to be having our buy stop order above the 1,895 to join a bullish momentum. And I told you about selling below the 1,869 as we need further confirmations to happen before joining that decline to the downside. But the latter is what happened here. We saw the breakout retest of structure to give us an opportunity to buy, and in fact price action moved over 2,000 pips in our favor before we started seeing the sell pressure resume at around the $1,915 level. And so for some people here, so you must have taken some profit here. So because we had over 2,000 pips move to the upside, some people must have taken their profit. But if you did not take your profit and you are still in this trade, my advice to you right now is to get out of this trade. Let's get out of this trade right now, and let's see how price action is going to be reacting to this current structure. Now look at what has been happening here since the later part of the New York session yesterday. So as soon as price got into the 1,915 level, you can see what we saw here. Selling pressure resumed. Price action fell into a consolidation phase around here that has a potential of transitioning into a reversal pattern, and at the same time it could transition into a trend continuation pattern. Now what am I looking at for a reversal pattern in this current structure? So if we take into consideration this impulsive move to the upside, we saw that as soon as price got into the 1,915, we saw price come back into the 1,904 level, which is a support line of that channel. We saw another test of the 1,915. Price was unable to break the previous high, finding a lower high to give us something that looks more like a reversal pattern here. And with the structure here, I placed a sell stop order below the neckline area of the 1,904. As this 1,904 is serving as a neckline of this potential reversal pattern, and not until the breakdown of the neckline happens that this reversal pattern will become valid at this point. Now in the last couple of hours, price action appeared to have broken down the 1,904, so I have a sell position triggered here. And if you're also part of this one, kudos to you for being on standby to have been part of this one. So you want to be having your stop loss somewhere right around the 1,912 and the 1,915 just to mitigate the risk on your portfolio, so you can have your stop loss around that area. Then let's see how far this bearish momentum is going to go in that regard. So now when we talk about the selling opportunity here, as long as price remain below the 1,904 level, we want to feel comfortable in our sell position. So where will our TP target be for this, for the XAUUSD, if the sell momentum continues to the downside? Well, for me at this point, any sell momentum from this area is going to be seen as a retracement of the impulsive move that started this week. I think it started last week. And to have a better perspective into that, let's scale up into the 4 hours time frame. So this is the 4 hours time frame I shared with you yesterday. And if you look at the structure here, most importantly, since the beginning of the month of February, you will see that price action has been bearish. So the month of February started at around the 1,960, a very important key level there. And since then, price action has continued to find lower lows and lower highs. And as a result of this, we had this descending channel figured out here after connecting the series of lower lows and lower highs. Now, what we saw here on Friday, okay, at the beginning of this week was quite interesting, as we saw the breakout of the resistant line of that descending channel, which is a significant signal that a bullish momentum is likely coming in. And what we saw afterwards was quite interesting, as price action continued to find higher highs and higher lows. Now, if we zoom into the current structure, taking into consideration the last impulse leg in this market, the last impulsive bullish leg in this market, this is what we have here. And looking at this structure, a retracement phase looks long overdue in this market, as those who are taking advantage of this bullish momentum here will at one point want to be doing some profit-taking activity, which shall be reflected on the chart in the form of a retracement of that impulsive move, probably into our golden zone area, in anticipation of another wave of bullish momentum. Now, the next question is, if the sell momentum continues here, that is, if it breaks down the 1,904, which we identified on the 1 hour time frame, and price action continues to the downside, where are we going to be projecting our TP target for the sell momentum to be? Where will this potential retracement phase end in this market before the second wave of the bullish momentum will probably happen? Now, if you look at the descending channel which I showed you earlier, and you saw the breakout of the resistant line of that descending channel, you will agree with me that from a technical standpoint, whenever we have a breakout of a significant structure like this, we expect that one point in time price may likely come back to do a retest of that resistance of that descending channel to incite another wave of bullish momentum. So we have a structure here at around the $1,860 level, which I told you at the beginning of the week is a significant structure on our daily time frame. Now look at how the structure shares a beautiful confluence with that resistant line of the descending channel. So there is a likelihood that price action may come back into the structure, giving us a whooping 3,000, 4,000 pips thereabout, if that is going to be the case. So let's be on standby if sellers continue to trade below the 1,904 level identified on the 1 hour time frame. So that is one possibility here. Then we also have a structure here at the bullish trend line, where a TP target could also be, where another wave of bullish momentum could happen. And then we also have another one at the 1,895. So now what we are going to be doing with this kind of situation here is to first of all have our TP target at the 1,860. And then as soon as price tests the structures like the 1,895 or the bullish trend line here or the 1,869, as soon as price tests the structures, we want to be moving our stop loss to secure this existing sell position that we have in that market and see how far that bearish momentum will go. So if it's going to get into the 1,860, we want to see how price will relate to that structure to determine if we are going to be buying. And if we are going to be buying, we want to be seeing some rejection of that structure to buy. And if we see a breakthrough of the structure, then definitely selling pressure below this level will be welcoming a sell position in this market. So this is what I'm going to be looking forward to for selling opportunities for today on the XAUUSD. So I implore us to be on standby to catch these opportunities. Now, in as much as we are looking forward to selling opportunities in this market, and we should consider the fact that price action has been bullish in the last 10 days now, and there is a very high chance that we could have a bullish momentum continue to the upside. And the structure we identified on the 1 hour time frame has a tendency of transitioning into a trend continuation pattern, probably in the form of a bullish rectangular pattern. So if we see, following this impulsive move here, price has fallen within this channel, we could see a breakout of the 1915 to trigger our buy stop order to join that trend continuation to the upside. So this is another possibility that could happen here. So let's keep our mind open for any potential opportunity in this market. I told you already I have a sell stop order which has already been triggered right now. I have a stop loss around the 1912 and the 1915 area to secure this current trade I'm in right now. So let's see how price action plays out from this current structure. But if it so happens that we are taken out of the sell position, then we have a buy stop order triggered above the 1915 that will be welcoming a buy position in this regard. For those who are already still in the buy position, I told you to move your stop loss. Ensure you have moved your stop loss accordingly, as we might likely be seeing a sell momentum which will be triggering a retracement of that previous impulse leg. So that is my view here on the XAUUSD. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So with that being said here, if you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair, which will be the last pair that we shall be taking for today, and that is the USDJPY. Now on the USDJPY, during the course of the live session yesterday, we identified a flat channel where price action was trading within a range between the 135.100 and the 135.600 level. So this was our support area for yesterday, and this was our resistance line for this week. This is the highest point price has ever been for this week. That is the 135.100 area. Now during the live session yesterday, in fact it was during the live session we had the breakdown retest of the 135.600. I told you I had a sell stop order triggered, and I advised that we joined around that area, and we saw price action move about 130 pips in our favor before this bullish momentum began. And I hope you moved your stop loss to secure your position, as you would have been taken out with a small profit, or at worst case scenario, break even. Now with the situation here, after price action tested the 132.300 area, let me identify that structure here for the sake of clarity. So 132.300, I guess. Okay, so let me label this area for the sake of clarity. So we have the 132.300 level here. So since price tested the 132.300 level, what did we see here? We begin to see buy pressure resume in this market. And one interesting thing about the buy pressure is that price action continued to find higher lows to give us a clue of a possible reversal pattern here. Now if we look at the since the beginning of the week, it has been bearish. We have a bearish trend line figured out after connecting the series of lower highs here. And if we look at the higher lows here, it appears price action has transitioned into a reversal pattern in the form of a double bottom structure, as you can see here, where the 135.600 level, which was initially our support line for the week, is serving as the neckline of that reversal pattern. And during the early hours of today, what did we see here? We saw a breakout of both the bearish trend line and the neckline of that reversal pattern at the 135.600. So we saw the breakout, we saw a good confirmation retest of structure, and it was at this point it was valid that this has turned out to be a reversal pattern here. And with this situation here, we had a buy position triggered. If you are not yet in this trade, you might want to be in this trade above the 134.00 level to join this potential bullish momentum to the upside. So going into the New York session today, we are going to be holding on to a bullish bias here. And to further make things easier for us during the New York session today, I was able to identify this bullish trend line, which we shall be using as a yardstick for a trend continuation to the upside. So as long as price remain above this bullish trend line, we shall feel comfortable in our current buy position here. So now talking about the bullish momentum in this market, we have a tendency of having multiple entries in this market here. And remember, we have a resistance point for the week at the 135.00 level. So as soon as price gets into that area, you move your stop loss accordingly, secure your current position, and a breakout retest of the 135.100 level will definitely be welcoming additional position in this market. Now, there is a caveat to this bullish potential in this market, which I also emphasized during the live session yesterday. Now, to show you the caveat here, I want to scale up a little bit into the 4 hours time frame, where I want to be sharing with you a key structure at the 135.800 level here. Now, remember, we identified the structure at the beginning of the week where the 135.800 level was initially a strong demand zone before the breakdown of that structure happened here on Friday last week. And you all know that from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price action is likely going to come back, do a retest of that structure to incite another wave of bearish momentum to the downside. And if a breakthrough happens, then we might likely be looking forward to buying opportunity here. But in the meantime, what I want to focus on right now is the 135.800. So like I was saying on the 1 hour time frame, I said if price action continues to the upside, we continue to move our stop loss to secure the current position. Remember, this is a counter trend opportunity, and the reason why I came to the 4 hours time frame is to show you the importance of the 135.800. So if price action gets into that structure, we want to be moving all the stop losses of our buy position to somewhere right above the 135.100 area. And the reason why that is simply because we want to see how price action will be reacting to that structure to determine if we are going to be buying, that is adding more position to our buy trade, or getting ready to join a decline to the downside. So if price action climbs into the structure and we start seeing selling pressure below this area, we shall be getting ready to join a decline to the downside. But if a breakout of the 135.800, price action climbing above that strong demand zone, buy pressure above that level will definitely welcome additional buy position to our existing trade. So this is what we shall be looking forward to on the USDJPY for today. To buy the USDJPY, that is what we are looking forward to. And going back to the 1 hour time frame here, remember I told you that we are going to be using this bullish trend line as a yardstick for trading activity for today. So as long as price remain above this bullish trend line, we shall feel comfortable in our buy position. However, if price action takes us out of our buy position in such a way that it breaks down that bullish trend line, then we might be getting ready for a momentum shift. Now, if the breakdown of the bullish trend line happens, we are not joining right away, as we need further confirmations to happen to give us that leverage to join that decline to the downside. So I want to be saying something like a retest of structure on my lower time frame, that is, price is unable to break above the 134.00 level as it's been met with selling pressure below the structure, then we could have our sell stop order below the structure, probably below the 133.750 or the 135.600 level to join that decline to the downside. So that's the only reason we shall be selling the USDJPY for today. The only reason is when price breaks down that bullish trend line, selling pressure below that structure on our lower time frame, then we want to be thinking of selling. But as long as price remain above the bullish trend line, we shall remain bullish in this particular market. So that is that on the USDJPY, and I think on this note I want to be calling it a day. But before we draw the curtain, let's run through what we talked about today. Let's do a recap of what we talked about today for the sake of those who are not part of the beginning of the live session. So the first commodity we talked about today is the US oil, and on the US oil we have a sell position running, and I told you that we still sitting within a strong demand zone here, and there is a likelihood that buyers could come in this market. So we were able to identify structures here that we shall be using to guide trading activity for today, and one of the structure, which is the most important one here, is the bearish trend line. So since the beginning of the week, price action has been bearish, and after connecting the series of lower highs, we have this bearish trend line figured out. So I've said that as long as price remain below this bearish trend line, we feel comfortable selling the US oil. And a further breakdown of the $72.50 level will be welcoming additional sell position in this market, as price action will have taken out all the buy position at the $72.50 area. However, if we start seeing buy pressure resume above the $72.50 level, remember this is a very strong demand zone which we identified on the daily time frame. I want to see a breach of that bearish trend line, that is a breakout of the trend line there, to give me a confirmation to buy. So if price action finds buy pressure around this area, hold on a second. If we start seeing buy pressure around this area, something like a double bottom structure, head and shoulder pattern, whichever case it may be, a breakout of the neck of the trend line here will just trigger my buy stop order at the $73.50 level. So I have a buy stop order at the $73.50 level, and we continue to look forward to buy price continue to find higher highs. And I told you that the setup here has a potential of giving us multiple entries, as we have structures like the $75 level to add more position, break out of the $76 level to add more position to as well. We went on to talk about the US tech for today, and on the US tech it's still very, very choppy on this chart, and we continue to see buy pressure resume around the 11,800 to further emphasize the strength of the buyers in this market. And following the rejection of this 11,800 during the New York session yesterday, we can see that price has been finding higher lows to give us a clue that bullish momentum is likely coming in this market. And I told you that I want to see a breach of this trend line and the $12,000 area to buy the US tech. So we want to be buying above the $12,000 area, and we want to be adding more position at the 12,100. So thinking of selling opportunities here, well, I would not be selling. I will not be thinking of selling unless price action breaks down the $11,800 area, setting pressure below that structure on our lower time frame to join that decline to the downside. Remember, I shared the 4 hours time frame with you, and I showed you how important the 11,800 has been for the buyers throughout the month of February. So buy pressure continue above this level, as we'll be negating any selling expectation here. So as long as price remain above the 11,800, we are not going to be thinking of selling the US tech. So that is that on the US tech for today. Then I went on to talk about the GBPUSD, where we already have a profitable buy position running here, and I have told you that you should move your stop loss to secure this current position. And going into the New York session today, we already have a structure in the form of this trend line to guide trading activity for today. So as long as price remain above the trend line, we'll feel comfortable in our buy position. However, if price action drops below the trend line, break down the structure to the downside, it will be a welcome opportunity to sell. And I told you how the selling pressure has been observed here since price action tested the 12,200. And it appears that we are having price action transition into a reversal pattern in the form of a double top structure, as price is yet to break out of the previous high. So we have a neckline at the 1.21450, which also shares a confluence with the trend line. So I have said that we want to see price action break down. We are not getting too excited. Remember, we want to see a retest of structure on our lower time frame, then we could join that decline to the downside. So we are looking forward to a selling opportunity here below the 1.21450, and we are looking forward to adding more position to our buy trade if the bullish trend line continue to hold that bullish momentum at the 1.2200 area. Then we went on to talk about the XAUUSD today, which also has a similar setup with the GBPUSD here. And I told you that I already have a sell stop order triggered here, and price action appears to be trading at break even at this point. And a stop loss sitting between the 1915 and the 1913 area. So we continue to look forward to see how far this bearish momentum will go if price continue to trade below the 1904. So for today on the XAUUSD, we are looking forward to selling opportunities as long as price remain below the $1,904 level. However, if this continues to trade to the upside, we have a buy stop order above the 1950 that will be triggering our buy stop order. Then the structure here would have transitioned into a trend continuation pattern. Then we went on to talk about the USDJPY for today, and on the USDJPY we already have a buy stop triggered here. We have a buy position running, and we have identified this bullish trend line as a yardstick for trading activity for today. So as long as price remain above the bullish trend line, we shall feel comfortable in our buy position. Then I told you how this current structure has a tendency of giving us multiple entries here, as we also have another possibilities of adding more position at the breakout of the 135.100. Now talking about the buy position here on the USDJPY, I told you the 135.800 has been a demand zone before the breakdown of that structure happened on Friday last week, and we might likely see a situation where price will come back and do a retest of that structure. So what I simply said here is, if you are still on the buy position that we have here and price continues to the upside, as soon as price tests the 135.800 level, you want to be moving on your buy position stop loss to somewhere right above the 135.100, as we wait out to see how price action react to the 135.800, which will be deciding if we are going to be selling or adding more position to our existing trade at the breakout of that structure. So these are my views for buying opportunity on the USDJPY, and in as much as we continue to use the bullish trend line here as a yardstick for trading activity, a breach of this bullish trend line, I said, will be welcoming selling position. But I told you that we are not going to be joining that sell position right away, as we need further confirmation in the form of a retest of structure. It could be the retest of the 135.600, the bullish trend line, or the 134.00 area. But what we want to be looking out for is selling pressure below the structure on our lower time frame. Then we can join that decline to the downside. So this is what we are looking forward to on the USDJPY for today. And for those who are still in the buy position right here, let's hold on to our buy position stop loss around the 133.150. And one thing I would like to say here is that if price action gets into the 134.400 area, kindly move your stop loss to your entry point as we continue to monitor price action. So it has been a wonderful moment with you guys today. I hope I've made myself clear and we were able to identify potential trading opportunities, and I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision today. So let's see how things will work out in the next 24 hours, and we shall be coming back here tomorrow to review how well these pairs are doing and get prepared for the New York session tomorrow. Thank you for being around, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the market and get prepared for the New York session tomorrow. Please remember that we have a macroeconomic event today. It's coming up in an hour's time. Ensure that you secure all your positions correctly so that we don't get caught up in any sudden pullback that might likely happen as a result of the event. Please and please. All right, everyone. I can see your comment, my Gigi. Thank you, and do have a wonderful and beautiful evening, everyone. Bye-bye.